Welcome back to Investing with Confidence. As always, I am your host, Joshua David, and we are having great times here in talking about the do's, the don'ts, the financial markets, how to make smart investing decisions, whether you're talking about income potential in the markets or maybe 401ks, IRAs, and just so our listeners understand, you have the ability to manage those. You can make your decisions in there. You just have to learn the skills and be taught how to do that properly so you're making smart decisions within those accounts. If you happen to miss 2 tickets for that investing class that talks about a strategy that's designed to follow the institutions, follow the smart money. Al was talking about using strategies for sideways markets, potentials to get paid to wait. It's option strategies. You got to come see these in these investing classes that Al teaches right here in Bloomington. I'm going to give away 20 tickets here for callers 1 through 10. You're going to receive 2 tickets. Call 952-814-4410. That's 952-814-4410. All right, Al, we have a couple more stocks to talk about, and I got, I like to talk about hometown heroes, and that is that good old company called Medtronic.
You bet.
I believe it's off 394 over here, if I'm not mistaken.
They have buildings around the Twin Cities.
Yeah.
It's become a huge company, innovator in the implantable pacemaker industry, implantable defibrillators. Fantastic company.
Yep.
I tell you, years ago, and I'm talking years and years ago, when I first got out of college, I was in the medical industry selling medical equipment. Everybody wanted to be the Medtronic rep. So if we ran across the Medtronic rep and he had a cold or something, we all got excited. Maybe there's going to be an opening at Medtronic. But it's a fantastic company. It's gone through some a little bit of a downturn there price-wise.
Yeah, it's crazy. It's funny that you say fantastic company, but stock price in 2021 actually down about 10%. So the company doesn't always reflect the stock price, and that's what I want our listeners to understand is you have, and we talked about this in the last section, you need a strategy that tells you how to read this story, which is a price chart, to make smart investing decisions. So actually down about 10% on the year, roughly when we're doing this show at about $109 per share. And we have a couple supply zones just overhead here and a demand zone a little bit further down. So is there a possibility this downtrend could continue here? It's possible, but it's all about putting these odds in your favor.
Right. But I think, with a company like Medtronic, I get excited when I see a demand zone at a much discounted price from where it had been before.
Yeah.
And I'm not sure, I think in the medical equipment industry maybe has taken a little bit of a backseat to the coronavirus vaccines and medications because a lot of the a lot of procedures have been put on hold in hospitals because of that. Medtronic might have been kind of hit by that, but
but those are all also opinions. Remember you talked about earlier. Read the price chart. That's telling you exactly what's happening, right?
And that's an excellent point. I mean, here you've got a fantastic company that leads the industry. It's very innovative in product design, product development. Yet its stock price has gone down. So sometimes it's not the fundamentals that are important. It's who's buying and who's selling. Obviously, there were sellers, maybe people that had built up a big profit over the years that wanted to take their profits in Medtronic. But the great thing is that you got these fantastic companies that sometimes get beaten down, and then that's really what we look for. And it's unfortunately the opposite of what the public does. When the public sees something that's been beaten down, they shy away from it. It's like the example we use. If you go into a grocery store and the announcement comes across their intercom, hey, everything in the store is 50% off. Do people leave? Do they run away? No, they buy as much as they can. But in the market, if something is off 50%, they shy away. They think this is terrible. Something's wrong with this company. It may just be the creation of a great opportunity for you to get into something that was, for some reason, maybe undeserved, was the price that was beaten down.
Yeah, and a lot of that is because if you're listening right now, you've been conditioned to think down is bad and up is good. When things are looking bad, you're being conditioned and told to get rid of it. When things are looking good, you're told to buy or buy more. Think about this. If you're listening right now, if you've traded stocks in the past and you said, that stock, Medtronic, it's going up a little bit. I'm going to wait till it goes a little bit higher, and then I'll buy some, and then I'll buy more as it goes up. Well, you're buying at retail prices. Let's flip that. Would you do that in your everyday life? You go to the grocery store and say, hey, that loaf of bread's $2. I'm going to wait until it goes to $3, and then I'm going to buy some, and then I'll buy more when it goes to $4. You would never do that in your everyday life. But people do that in their stock trading, their futures, Forex, options trading, cryptocurrency trading. Will learn the skills to buy at wholesale, sell at retail, just like those financial institutions do. Just looking at Medtronic here, possible supply zones, as I talked about earlier, around the $120 mark, and there's another one right in front of that, 116, based on the time frame that you're going to use. So based on your strategy, when people are looking for short-term income, they might use a smaller time frame. Longer term might use a bigger time frame. There's also a demand zone, an area that I like, right around $97 per share, and that's an area of interest. So it's just about waiting for price to come to you and then executing it. And the great thing is the computer executes automatically for you. So if you want to learn more about a strategy based off of supply and demand that teaches you how to buy at wholesale and sell at retail in the financial markets, which is exactly how you do it in your everyday life, you got to come into one of these investing classes and see how that's done. I like these classes because one of the comments I always get is, I really like this because I'm a visual learner. I like to see how it's done, and then I like to be shown how it's done, and then I like to do that. That's one of the comments I really hear a lot. So I want to give away 20 tickets for callers 1 through 10 right now. Call 952-814-4410. That's 952-814-4410. When you call in now, you're also going to receive some stock picks that actually illustrates and walks you through why they're potential opportunities. Al, there's one more stock I want to talk about here, and I know we're getting somewhat close to the end of the show here, and it's one I think everybody might have this in their back pocket or in their purse. It's called Visa, and another great company. I mean, these credit card companies, I think, are bringing in billions and billions of dollars per year. Well, think about this now. So Visa, 2021, actually almost exactly flat on the year, a 0% return on 2021. It did get up to about $252 per share. Right now, I'm doing the show, it's right around $219 per share. Great opportunities with sideways strategies with options.
Right.
Talk about that a little bit.
Yeah, and here's Visa is a company that also I think was a victim of the coronavirus issue as travel diminished and people were spending more time at home. They were doing less entertaining, less traveling, and that impacted, I think, the potential value of Visa. But as things are starting to reopen, this may be one of those companies that really benefits from that. But again, these are facts that you can form opinions on. My opinion of what Visa is going to do really doesn't matter. What really matters is the people out there that have billions of dollars to invest. What are they doing with Visa? Are they buying or are they selling? Are they showing us where they're buying? Are they showing us where they're selling? Because that's the most important thing. Again, for those people that are looking for something other than a long-term investment, if you need some additional cash, short-term, where that can be daily, weekly, monthly, then you need to be able to be involved with an investment that you can get into and out of on a short-term basis. Fundamentals don't really impact that. It's just buyers and sellers. Let's keep it simple, and let's just use a strategy that has been designed to identify where the unfilled buy orders are and the unfilled sell orders are that will be impacted by people that have hundreds of millions or billions of dollars to invest in a particular company.
Yeah, and that's the key, is to understand who's moving the market. We've talked about this every single week, it seems like. Institutions move the market. It takes millions and billions of dollars to move the market. And so what we want to do as average investors is trade like them. And think about what's those fish that kind of hangs around
Remora fish.
Remora fish, yes, that hangs around those sharks. And the shark does all the work. The big shark does all the work, and that's the institutions, the big money. And the remora fish kind of pick up the scraps as they're going.
Yeah, the remora fish are really the smart ones.
You're exactly
because
right.
they let the big fish, the shark, do all the work. We do the same thing.
And it's not that term, work smarter, not harder. It's actually working right. And that's what we want to do in the financial markets, is work right in the market, having the right strategies, the right plans, and then follow that plan. And Al, you have investing classes that you teach actually, here in Bloomington, and you talk about that plan, how to make smart investing decisions. So people that are looking to protect their retirement accounts, we're seeing a lot of volatility right now. Right. It's kind of scary out there for people that have 401ks, IRAs, because they're not sure where the market's going to go. Well, how about having a strategy that ensures your portfolio protects your portfolio. I know you're really key on that, just talking about keeping what you have, because if you can't keep it, you can't grow it. And I want to give away one last set of tickets to this investing class right here on Bloomington for callers 1 through 10. I'm also going to give away some stock picks. Call 952-814-4410. That's 952-814-4410. In these classes, we talk about how to manage risk, navigate these volatile markets, some of those common mistakes that novice investors make, but how to minimize them, also how to time the market by letting price come to you. We've been talking about how to wait for price to come to you, where you want to be a buyer at wholesale, just like Walmart. They buy at wholesale, sell at retail. We want to do the same thing in the financial markets. Buy at wholesale, sell at retail, and hopefully have better and smart investing decisions. Al, we talked about a lot of different stocks here today, and I hope our listeners kind of were inspired to, hey, learn the strategies to make smart investing decisions. But you got some tips every week. Let's hear today's OTA tip of the week.
You know, I think the one comment we hear almost every time we do one of these classes, Josh, is, I wish I had done this earlier. You know, and for what it's worth, by the way, it's never too late and it's never too early to achieve the goals that you want to achieve. There's no time limit. There's no rules. You can make decisions now to change or to stay the same. You can make the best of things or the worst of things. We hope you decide to make the best of things, and if you need help or guidance, we're here for you.
Sometimes people just need some inspiration. I hope we inspired people to get in these markets, great opportunities, and start today. Once again, 952-814-4410 for 2 tickets for this investing class right here in Bloomington. As always, same time, same place next week. Until then, retire